Hello and good morning, listeners. This is Almus Market Mornings, your daily dose of global financial update with Shikhar Garg and Jayaram Krishnamurthy. Now, listeners, with a surge in investments by retail traders and resurgence of FIIs, the Indian stock market is about to reach a new milestone, a valuation of $4 trillion. Although we have seen some mixed bag move occurring yesterday, if we move beyond the index, it is quite interesting feat. On the global front, Moody's have cut China's credit outlook to negative, considering the growing debt risk. Even Australian economy grew by 0.2% in the previous quarter against the expectations of 0.4%. And the one update that moved the markets a bit yesterday, apart from these, was the US job opening numbers. So, JK, I'd like to hear from you. What's your take on these developments?
Good morning, Shikhar. Uh, Actually, the markets have been, after the last week's hectic moves, consolidating, digesting more data, listening to policymakers, and preparing itself for the barrage of data and events that lie ahead of us. Yesterday's JOLTS data showed the number of jobs available in the US dropped to 8.7 million versus 9.3 million that was expected, and much less than last month's number. And it's a further reflection of cooling labor market in the US. Job openings have tended to come down after landing above economic expectations in August and September, and they are now at their lowest level since 2021. In fact, we have seen even the layoffs have ticked up slightly to 1.64 million from 1.61 million, while the quit rates has actually come down. So all these indicate that people are wanting to hold on to their jobs, and employers are not opening up more jobs for them. And this is exactly the situation what the Fed wanted. Of course, they will look for more evidence from non-farm payroll, ADP jobs data, and also the challenge job cuts data, which is ahead tomorrow. So all in all, good news from the inflation point of view or the rate cuts point of view for the US. On the European side, business activity is still underwhelming. We had services PMI showing it is still in contraction territory that started in August, but in UK it was revised slightly higher to 50.9 in November, up from a preliminary estimate of 50.5. And the latest reading indicates expansion in service sector activity in UK, attributed to increasing demand and, of course, completion of some unfinished projects as well. On the policymaker side, the Schnabel, who is known to be, hawkish, hawkish person on the ECB side, actually made some dovish comment yesterday, and he actually said the most recent inflation number has made further rate increase rather on that, which is one of the most dovish statement that we have heard from ECB in recent times. You could see that the German index, rather the DAX, reached all-time high on Tuesday. Yes, there is some company for the Indian Nifty as well. It surpassed the previous high of 16,528 points. It was on the back of better than expected inflation number, as well as expectations growing that ECB will be cutting rates in the first quarter of 2024. Overall on the stock market in the US also, there was more consolidation seen, but interestingly, the VIX index has fallen back below 13, just above last month's trough of 12.45, which is the lowest level that we have seen since 2020. So actually, there is no, concerns about the stock markets still rising, or you can say it is really bordering on, complacency. Yes, Australian rate decision yesterday was in line with the expectation, but they kept the door open for future actions, data dependence. But interestingly, Australia in this year has gone for pause in rates for 7 months, while they raised rates for 5 months. And the latest pause coming in December. So it's kind of a very dynamic approach to monetary policy that they have followed. On the currency, dollar has been undergoing a healthy upward correction after the steep fall last month. Technically oversold conditions, caution ahead of key data, and Fed meeting has kept Euro and GBP traders taking profit on their long positions. Chinese yuan weakened more after the Moody's downgrade that you mentioned about. And this decision is not a total surprise, as we expect. China has been struggling, and this is just an affirmation of what's been happening in the economy. But the Chinese yuan is likely to take more cues from macro data, and that is showing some improvement recently. Chinese central bank was immediately very active selling dollars for yuan yesterday. So after seeing 7.1750 post the decision, it has come back to 7.1650. 10-year US yields and the 2 years, they fell further yesterday, but not much of a reaction from the dollar. The expectation of rate cuts rather in May has gone up as high as 88% from the Fed. Just for information, the Bitcoin hit a fresh high for the year at 43,000, its highest since April 2022. On India, as you said, the NSE stock index hit all-time high again yesterday, second day in succession that we have seen. This is on the back of the GDP number and the political news that we had in the last few days. Adding to the sentiment was that India's service sector activity continues to expand, as shown in November. And this is the 28th month of expansion in services activity in India, and it beats all other economies by a large mile. So it's really something that we should stand up and look at. Yes, stock markets are recognizing it. Currency is a different matter. It's more driven by what the policymakers want and the flows, because we are running a high trade deficit, which is still not well funded through capital flows. But it is only a matter of time. I expect these flows to improve much more. This month we already had nearly 2.8 billion of inflows, which is already matching the full month flow of November. Therefore, things are looking up for us so the flows are concerned, and probably for the rupee too. Thank you.
Okay, JK, that was really good. And folks, it definitely is an interesting fate of 28 months of service expansion for India. That's no easy task for the nation to achieve. On the other hand, for the domestic update, folks, our central bank has begun their monetary policy meeting, and the updates from the same shall be received by this Friday. So let's see how things go about for RBI. But on the global front, a healthy upward correction for dollar index was observed while yields continued to fall. And the expectations for the rate cuts soared to as high as 88% now. Even risky assets or the assets which were not so preferred earlier during this year has risen to 43K. That is the Bitcoin. But on the macro front, if we have to talk about the Australian Central Bank's decision continues to be of pause as expected. A lower job opening for US is a positive on the inflation and the rate cut point of view. Just the last bit that we have to talk about is the good company. German DAX is providing our domestic equity indices by reaching a new high yesterday. And how things go about for the Germany economy is to be seen because of the lower than expected inflation numbers and the rate cut expectations on the European side also starting to take some traction. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.